Boards don't need equations. They need a story they can trust.
Let's make the ETR story simple and credible. In every boardroom, one tax metric stands out: the effective tax rate, or ETR. It affects net profit, influences investor perception, and signals how well a company's tax strategy aligns with its business model. But most ETR decks look like spreadsheets, dense, technical, and disconnected from the business story. Boards lose confidence not because of the numbers, but because they can't see the logic behind them. The goal isn't to impress the board with formulas, it's to explain why the rate is what it is. This diagram shows how the statutory tax rate, like 20%, becomes the final ETR after adjustments for things like R&D credits, non-deductibles, and foreign tax rates. It's the simplest way to show how business reality meets tax policy.
ETR isn't just a number, it's how your business and tax strategy align. Every number has a journey, and the ETR Bridge tells that story step by step.
The ETR Bridge is a visual storytelling tool, usually a waterfall chart, that explains how your statutory rate becomes your effective rate. It translates complex tax adjustments into a flow that's logical and transparent. The bridge often starts at the statutory rate, for example, 20%, and walks through adjustments like permanent differences, non-deductibles, exempt income, temporary timing differences, depreciation, accruals, foreign rate impact, overseas profit mix, transfer pricing adjustments, incentives, or losses, other factors such as FX or withholding tax. At the end, you arrive at your effective tax rate, the real-world result. Each step on the waterfall shows what adds or subtracts from the headline rate. It's not just a visual, it's a control map that tells the board why the number changed. When you make the ETR visual, you make it understandable, and when it's understood, it becomes credible. Boards care about why the rate moved, not how it's calculated. That means cutting through complexity and focusing on 5 to 7 key categories that tell a coherent story. A typical simple bridge should include statutory rate, the starting line, e.g., 20%, permanent differences, items that never reverse, temporary differences, timing effects, foreign rate impact, profit mix by geography, transfer pricing, internal allocation shifts, incentives and credits, structural tax advantages, other one-offs, settlements, or exceptional items. A clean structure doesn't hide detail, it highlights meaning. The left chart is unreadable, 18 categories, color chaos. The right chart focuses on 7 drivers, each tied to a clear business story. That's the difference between data and communication.
Simplicity isn't less information, it's showing what truly drives the number.
A credible ETR story connects tax movements to business decisions, not to the tax code. Every movement in your bridge should have a business reason. Boards don't want tax terminology, they want strategic linkage. In every ETR conversation, the board doesn't just want numbers, they want meaning. This table connects tax drivers to business strategy, showing how each adjustment reflects a deliberate choice. Start with geographic tax rate differences. When a company centralizes intellectual property or risk hubs, it's not just operational, it's strategic. This validates regional tax efficiency and explains why the rate shifts across jurisdictions. Next, R&D credits. These aren't just line items, they signal long-term investment in innovation. Boards should recognize these as future-facing benefits, not short-term tax maneuvers. Finally, non-deductible expenses. Often tied to governance decisions like executive compensation, these increase the ETR, but transparently. It's not about hiding the impact, it's about showing the rationale. When tax adjustments are framed through strategy, the ETR becomes more than a metric, it becomes a story the board can trust. A great tax team doesn't just report ETR, they forecast it. An ETR bridge is most valuable when it looks forward, not backward. Separate recurring impacts, like R&D credits, from one-time events, like settlements or restructuring. Use scenario modeling to show sensitivity, for example, how global minimum tax or jurisdictional changes may affect next year's ETR. This forecast view helps boards understand not just what happened, but what's next, how much volatility to expect, and what levers can control it.
When your ETR helps the board see the future, compliance becomes strategy.
Even correct calculations can fail communication tests if ETR changes greater than 3 to 5% without clear cause, categories aren't consistent quarter to quarter, the bridge doesn't connect to business events, peer context is missing. This side-by-side shows how design clarity turns complexity into confidence. The same numbers, but a completely different impact. Your ETR story fails when it's mathematically right but visually wrong. A board-ready ETR bridge doesn't just look right, it's built to withstand audit and scrutiny. Boards and auditors both need transparency through consistent methodology, clear reconciliation, PBT, tax expense, cash tax, scenario notes for sensitivity, transfer pricing linkage. This closed loop shows how financial reporting, operations, and governance connect. It's the system that makes your ETR defendable.
Consistency builds credibility, and credibility builds trust.
Numbers convince analysts, but stories convince boards. The ETR bridge isn't just about tax, it's about communication. A great bridge shows what happened, why it happened, and what's next. It connects tax with business performance, making the tax team a trusted strategic partner, not just a compliance function. The final graphic sums up what every board wants: a simple, consistent, and forward-looking story they can rely on.
If this helped you turn complexity into clarity, subscribe and join me, Thanya,
For more strategies that make finance board ready.